This one stock is being compared to Palantir. What's up, guys? In today's episode, we're going to be talking about ZETA Global. ZETA Global is getting comparisons to Palantir. We're going to be going through talking about ZETA, why I'm so bullish, have tens of thousands of dollars invested in this company, and we're going to talk about their upcoming earnings this Tuesday. So let's get into it, guys. Come on over here to ZETA Investor Relations page. We can see that ZETA is going to have their Q3 2025 earnings on 11/4, which is this Tuesday. They're going to have their earnings. They had Investors Day. I actually was able to go out to ZETA Global Live, where I got to hear Tom Brady, Serena Williams speak. I got to hear the Chainsmokers speak. I got to meet David Steinberg, the CEO of ZETA Global Live. We got to chat with him for a little bit of time. So, all that before I was already super bullish on this company. Everything I saw at this event that they invited me out to for free only made me more bullish about this company. And I am so excited for the future of this company. I truly believe this company that's sitting at sub $5 billion market cap could be a 50 to $100 billion company. And you don't get comparisons to Palantir just because of no reason, right? This company is massively innovating and disrupting in the MarTech space, the marketing technology space, using AI. They're bringing a tool to a problem that many companies have, from small, medium to large companies. They work with them all. And it's fantastic to know that this company is being headed up by David Steinberg, who has had multiple businesses go very successful and have sold multiple of his businesses for a lot of money, a lot more money than what he initially got into them at. So we're going to go into Market Dash today. We're going to be looking in my Discord. We're going to be looking at my snapshot. And then finally, we're going to wrap this video up with looking at the charts and what they are telling us. So, first and foremost, their Investors Day. We're not going to go through all 166 pages. Don't worry. We're just going to talk about a couple things. One of the things I really like about this company is they talk about, 500 plus public tech companies. Well, out of those 500, they are, down to 22 companies have grown or expected to grow 20% year over year or more annually for 5 straight years. Obviously, they are a high growth company and they are getting profitable and they have good free cash flow. I love me some good free cash flow companies. Then out of those, only 8 have expanded or expected to expand free cash flow margins. Again, love cash flow, and they are among some amazing names: Reddit, Atlassian, Tempest AI, IoT, GitLab, NetCloud. Just amazing companies to be next to. And then among all of those, Zeta is one of the 8, right? We can clearly see here quarterly revenue actuals versus consensus. This company plays the Wall Street game so well, guys. They play it so well. Under promise, over deliver. Consistently under promising, over delivering. They've gotten through COVID, they've gotten through inflation and rate hikes, they've gotten through tariffs and workforce reductions, all while consistently under promising, over delivering, beat, all over the place, right? Consistently beating earnings, and we love to see it, right? So 2021, they were at $17 million in free cash flow, jumping up to $142 million in free cash flow. Amazing 70% free cash flow CAGR since going public in 2021. Phenomenal. Margins have gone from 4% all the way up to 11%, continuing to grow their free cash flow margins and their free cash flow conversions, 28% all the way up to 54%. They are crushing it. And guys, if you're new here, you need to understand free cash flow is the lifeblood of a company. It cannot be manipulated like EPS can be manipulated, net income can be manipulated. Free cash flow is solid, right? It is my favorite metric in punching this into a discounted cash flow model and understanding where their cash flows are going to continue to go on conservative assumptions throughout the next 2, 5, 10 years, and understanding what we should be paying for the price today. And that's what we're going to get to here in a minute with my snapshot. We went over all of that. We can kind of go over some things. In here, just some, like I said, 166. We're not going to go through all these. The market's three demands: defensibility of moat, predictability of profit expansion, durability of revenue growth. They are, like we talked about, they're disrupting a space in the marketing sector with AI. They just brought out a product, Athena. I want to see if we can get to where they talk about Athena. Here's one of their good infographics. The Zeta Edge own the data foundation. Yeah, I think this is going to be a big data player, a big data. They're going to collect this data from all this marketing and they're going to use it just like Palantir uses all the data and information to make the business work better, make the business more seamless, and essentially give more money back. So basically, when someone hires Palantir to come in and work with them, Palantir is receiving X amount of money, but giving back like tenfold of what they're actually getting in alpha or productivity, right? So yeah, they're paying X amount of money, but they're actually getting you know a huge return on their investment overall. Zeta is doing the exact same thing. I can't remember the statistic, but it's like for every dollar spent, they're for every dollar spent on Zeta, they're returning like 80 some percent ROIC, return on invested capital, to any company that goes with them, that chooses with them. Again, don't quote me exactly, but it's something around that ballpark, and that is phenomenal. Phenomenal, guys. So what they're doing in the alpha that they're giving to businesses that go with them and that hire them is just bar none. Bar none. Sorry, I'm looking at my kiddo here on the little monitor, making sure he's okay. He's sleeping. So you have your content, you have your container, you have your connectors, you have AI powered data foundation is the core. Proprietary super graph powers AII, or powers all. Sorry, used to saying AI. System of truth learns, intelligence scales across ecosystems, durable infrastructure, not episodic activation. Right? Intelligence super graph, systems of truth. We talked about the super graphs actually on a recent Spaces I did with Wealthmatica. He's on X. Go give him a follow as well. He's a big Zeta bull as well. So, like I said, we're not going to go too much through this, guys. If you want, I don't like death by PowerPoint. I was in the Air Force at one point, and we used to do this all the time. So I'm not a fan of this, and I know a lot of people aren't. So if you want to come and see all of this, all you have to do is go to investor relations page. Just go to Google, type in Zeta investor relations page. You can just scroll down here, right? Latest presentation. You can go through here and you can look through every little bit, right? For your due diligence. You can look at it all. But what I really wanted to talk about was going to be your earnings call and kind of looking at the numbers. So we can clearly see that the trailing 12-month revenue here was Zeta, like we said, 2020, sitting at 368 million and climbing all the way to 1.16 billion dollars in just this last quarter, essentially, right? So we can see, let's see, are these by quarters? Yeah, these are by quarters. So here's our year-over-year revenue growth. So you can clearly see 20% revenue growth has been consistent. Really over the last 2 years, they've been doing almost 30, they've been doing 30% plus revenue growth. Free cash flow has just continued to explode every single quarter, continuing higher, higher, higher. Their net margins are climbing like crazy. Their EPS is climbing like crazy, about to flip to positive. Their gross margins are staying steady, which is beautiful. Their balance sheet looks really, really good with 1.10 billion in assets compared to 426 million dollars in liabilities. They have basically double their liabilities, guys. Love to see it. Almost triple their liabilities. Love to see it. A big thing that people didn't like about Zeta was that their shares outstanding were continuing to climb, continuing to climb, continuing to climb. Well, they listened to us, the investors. They listened to us and they said, you know what? You're right. We need to cut it back. So the last 3 quarters, they've gradually stopped or declined in the amount of shares outstanding that they are giving. Love to see it. Love to see it. You get some claps. David Steinberg and Zeta team. You guys get some claps. Continue to do this. Like, we understand that you're a growth beast and you're a growth company, and as such, these types of companies need to dilute a little bit. It's part of the game when you're growing this fast. They need to dilute a little bit so they can continue to grow as fast as they want to. All we are asking is, let's just dial it back a little bit. Let's dial it back a little bit to save us, the small guy, from losing a bigger chunk of our shares, right? So you can see EPS climbing, net margins climbing, free cash flow climbing, revenue year over year climbing. The growth is through the roof, 20 to 30%, 30% the last 2 years. Revenue continue to climb higher, higher, higher. You can see buy and sell activity. Look at this. Over, and I'm on Market Dash again. I'll call them out again. Market Dash is who I'm using. If you want to get 10% off, 10 or 15% off, I can't remember what it is. To use this site, you can go through and it does automatic technical analysis. It has stock picks. It has all this one pager data and information. You can quickly come in and see all the financials and everything you want to know about a company. It's a tool that I really, really like. I really, really like this tool. It makes my investing time frame a lot quicker to understand a company and get on the ball quicker about whether I want to be invested in this company, right? So yeah, I'll leave that down in the link below. It'll be right next to all my other socials, my X, if you want to come follow me there. While you're at it, while you're down there, smash that like button, hit the subscribe button if you want more content like this. I'm about to be doing a Oscar earnings preview, as they have earnings coming up this week as well on Thursday. So I'll be doing that coming up soon. And then also you can check out all my other videos on my YouTube. You can come over to X, give me a follow there. I'm posting multiple times a day. Come over to my other socials. And also, if you want to join my Discord, you can join that as well. We have an investing Discord and a trading Discord. You choose what you want to be a part of, depending on what you are looking to do, long-term investing or short-term gains with swing trading. So back to the video. Amazing. Insider trading. You see this last 12 months? Zero. Zero sells. Over the last 12 months, we've had zero sells for Zeta. Amazing. Amazing. And we've had $3.2 million of purchases. And look who was purchasing. David Steinberg himself. David Steinberg and directors, CFOs, Christopher Greiner. The Zeta team has been buying back their own shares in 2025 over the last 12 months. In 2024 and 2025, over the last 12 months, they've been buying back their shares. And you got to just say, amazing. What more do you want than them to be buying back their own share? We want to talk about Wall Street analysts. Man, typically I'm going toe to toe with Wall Street analysts and I'm sitting there saying, man, you guys are really dumb. You guys are really dumb and don't get it. But I got to say, credit is where credit's due, guys. They have some solid price targets on this name. Understand we are currently sitting around $18 per share as of making of this video. Lowest of $30, average of 33, highest of 36. Now, there's only two analysts. Well, these two analysts are very, very smart. So at 30, 33, and 36, you're looking at almost 67% to 100% upside. 67% to 100% upside. To lay this out, typically in the stock market, you're going to get, if you invest in the S&P 500 or something like that, the VOO, you're going to get, 8 to 10% average return over lifetime of you holding that. We're talking about 60 to 70% right here, which should be the value of the stock today. The biggest thing that's holding this stock back, to be totally honest, is this frivolous lawsuit. Frivolous, the exact word that David Steinberg used to explain this lawsuit to me in person. Frivolous lawsuit. It just has to work its way through the court systems. I have no doubts that it's going to get dismissed, thrown out, whatever. Once that is out of here and we can get that stormy cloud over our head gone, this stock will start making its way to 20, 25, 30 plus dollars per share. You can count on it. not financial advice. I'm gonna do what I'm gonna do. I say count on it. I'm gonna do what I'm gonna do. You guys can do what you're gonna do. But I have tens of thousands of dollars in this company, and I know personally that this company has a very, 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 very high probability of going to 30 plus dollars per share based on my analysis. Institution sentiment, 59% are bullish, 41% are bearish. You got all the big dogs invested in this company. Don't mind this. This is actually off. I don't know why it's reading like that. It's off though. It's definitely not 38 cents for the company. Don't worry about that. Profitability, like we were talked about, free cash flow annual. We already talked about all these metrics. And look at this year to date, you're sitting at like almost 1% down on the year to date. 5 years, you're up 100%. So you're still getting in early on this company, guys. You're still getting in early on this company. I seriously see it going to 30 plus. If we pop down here into my Discord, again, this is the High Five Collective investing Discord. You can come in here. You can see we have a forum all for ZETA where we post consistent things. I post how much I'm buying, where I'm buying, when I'm buying, so on and so forth. And if you go to my YouTube, you're watching this on my YouTube or you're watching this on X, come on over to YouTube, 10x gem alert. This is 10x gem Wall Street is ignoring. This video right here, I go through my entire bull thesis on ZETA Global. I go through it all. So definitely give this a check, guys. And I think you will I think you'll like what you see and hear on that video. But coming over here to our High Five Snapshot, if we open this, you can clearly see I'm aligned actually with analysts for the first time probably ever. We have a $30 DCF, discounted cash flow, intrinsic value. We have a $27 EPS fair value. So about 30 to 40% margin of safety right now based on $18 or so per share. Going from $1.26 billion in revenue all the way up to 2.84 billion, 1.46 or sorry, 200 million all the way up to a little over $600 million in free cash flow. EPS going from 69 cents all the way up to $1.49, quickly getting to EPS profitability. And their value, growth, and technicals all are A plus essentially. Their health actually is probably a B plus or A as well, being almost 3 times their cash compared to liabilities, their assets compared to liabilities, and their moat is smaller, but I do expect it to continue to expand as time goes on. And they actually also just signed a deal with Amazon. I wanted to throw that in here as well. I posted that on X. They just signed a great deal with Amazon, and they're going to be working with them hand in hand on their marketing needs, which is again great job by the leadership here. So lastly, guys, to make the video not so long, we're gonna get right into the technicals. The technicals are this. This is a monthly chart. On this monthly chart, you see that we initially had this run up on our algo. This is our algorithm. Um, on our algorithm, we initially had this launch right here, right? And off this launch, we ran from, let's call it, $7 to $8 all the way up to $38. $7 to $8 all the way up to $38. Initial of 350% return. Then the lawsuit happened, fear, uncertainty, and doubt happened, and we cratered lower all the way down to a low of $10.67. Now sitting at $18. But look at this. We have another launch entry. Not just that, but we went from bullish on the flow to bearish on the flow. Now we're curling back up and going bullish again. Our algorithm is bullish, then swung down bearish, and now it's bullish again. And then finally, we are breaking out of this downtrend and we are riding this uptrend. We also have this volume shelf here, which basically says this is the line in the sand. This is bearish. This is bullish. We are just now crossing over that line in the sand while riding this um, trend line higher and breaking out of this downtrend. And we have a green pulse launch. Our Williams percentage range is climbing higher. And we should, like I said, consistently climb higher, 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 back up to $38 per share, and then blast off into all-time highs territory over the next few years. And I believe that this company in the next 2 to 5 years we could be looking at a 3, really 5 around a 5x. Honestly, if they really kill it, that's being conservatives, 3 to 5x. If they really kill it, then I can see them over the next 5 to 7 years, possibly 10xing your investment at $18 per share. So very massive looking chart, explosive. We can definitely run a lot. And to talk about earnings, which is the point of this video, getting down to the brass tacks right here at the end. Again, they're reporting Tuesday, November 4th, after hours, estimated 18 cents per share of EPS, revenue of $328.09 million. I expect them to come in and probably do almost $400 million in revenue. And I expect them to come in and do probably 21, 22 cents of EPS. Those are my bets. 21 cents of EPS and almost 400 million, close to 400 million of revenue. Those are my guesses. Um, Calculated guesses, I would say, but those are my guesses for what they do. So we're going to see a double beat, and I think we see a raise in guidance on this company. And for after hours, where do I think this company would go after they report? Well, seeing as they've kind of been beaten down a little bit here recently, I'm going to go ahead and say that we probably see a 10 to 15% move to the upside after they report. So getting to over $20 per share. That's if we don't continue to run on Monday, as we did run up about, how much did we run up? We ran up about almost 6% on Friday. So that's ZETA Global Live, guys. I hope you enjoyed this video. Smash that like button, hit the subscribe button. Come follow me on my other socials. If you want access to Market Dash, it'll be linked down below, 10-15% off. If you want access to the High Five Collective Investing tier, where we go over all of our High Five gems, big big possible outcomes for earnings. We go over fundamental analysis. We have courses. We got the whole nine. Also linked down in the bio below. Or you can just stay here, subscribe, and keep watching some great content and videos, guys. Appreciate you. Have a great day. Catch you guys in the next one.